And we are live. Welcome. Good morning, good afternoon, good evening, everybody. It's morning here where I am, so I got my coffee. How are you all doing? For the early birds that came and tuned in a little bit early, let me know in the chat where you're tuning in from, what time it is, if you're drinking coffee or if you're drinking beer. I'd like to welcome you all here today. We got another amazing talk for you. We're going to take a nice deep dive into DeFi. And I have Jeremy Guzmán here with me. We're just going to have a little bit of a chat here while we let folks trickle into the room and get to know Jeremy a little bit better. So, Jeremy, I know you've been into Bitcoin trading since 2016. You've been here you're an OG pretty much. In terms of this space, it's so young, like 2016, a few years ago, you're technically an OG. So what was your like aha moment? Why did you get involved in Bitcoin?
Yeah, so like you said, I got started in 2016. I got started because a friend of mine just kind of introduced me to Coinbase one day. He's like, "Hey, bro, if you want to make money, this Bitcoin thing is kind of blowing up." So I downloaded the Coinbase app, started tinkering with it a little bit, and then I ran into the white paper, Satoshi's white paper, and I read into it and got an understanding of the underlying tech. And that was kind of my aha moment, like most within the space, because of the self-sovereign tenants and all this other stuff. So that kind of, I just dove down the rabbit hole afterwards, and here we are.
That's awesome. Like it's interesting you mentioned the white paper because I think like folks coming into the space don't really know about that, and I think they see what they see in mainstream media about like money going up, money going down, people using it for crime and stuff like that. But I think it's a bit of a jump to make it to the white paper. So it's interesting that that was what got you. So folks
Yeah.
out there, if you're seeing this for the first time, you're like, what is this Bitcoin stuff? Take a read of the white paper. When I read it personally, it was I had put it off for a while because I thought it was going to be this deep technical thing, but it's surprisingly approachable. It's 8 pages, very easy to read. There's a little bit of math in there, but yeah, it's
Barely. Yeah.
yeah, cool. That's super awesome. So I know that you also have a passion for educating people about the space. What is the first thing you kind of teach folks when they're interested in getting into crypto and Bitcoin?
Well, the first thing that I got into is how easy it is, right? The first thing they say is, I don't have enough money to buy a whole Bitcoin, right? They go immediately to the price and they say, oh, Bitcoin right now I think is at $11,000, right? I don't have $11,000. Well, that's fine because you could put in 5, 10, 20, $100, and now you have a non-dilutive portion of a commodity, right? So then now that stimulates more questions like, okay, what does that mean? How is Bitcoin a commodity? How is it different than gold? How can I use it within my own financial allocation plan? Stuff like that, right? Things that are more relatable to everyday use as opposed to getting straight into the tech jargon and then they're like, wait a minute, they're kind of it seems like a little scamish, if you kind of dive into it initially. So I kind of give it more content by giving more relatable analogies.
That's awesome. That's super cool. Uh, okay, so I know you also have a business called Mass Adoption LLC. I'm super interested. Tell me
Yeah.
more about that.
Yeah, sure. So the whole goal with mass adoption is again to educate, but to also um, kind of facilitate this need of self sovereignty, right? We want people to be able to operate on their own, to um, execute peer-to-peer transactions with direct one-on-one transactions with one another without the reliance on a central authority, right? Without the banks or people use Western Union or MoneyGram. We're trying to eliminate the need for all that and educate people that and knowing that you control or you could execute some of these transactions on your own, right? So sovereignty is a really big principle within our organization, and we kind of just want to upbring the low, middle, and unbanked and underbanked communities, and offering them these technologies, these innovations, so they could improve their day-to-day activities as well as those among them. You know what I mean? So, with that being said, we kind of like to educate people on what sound money is, and then we transition into cryptocurrencies and the tech and the DeFi space, because it kind of offers like a good transition between the two, and that's how we get started with cryptocurrencies.
That's amazing. I'm definitely going to check you guys out after this. Cool. So I know you're also a student yourself. So you're doing all these things. You got a business, you're trading, and you're going to school at the same time. That's quite a packed schedule. And I see you're studying government contracting. So tell me more about that, because I'm not 100% sure what that means.
Sure, I wasn't even 100% sure what that meant when I got into it either. So pretty much, I just got the certificate this past summer. So that's a done deal. I don't got to go back into that anymore. But pretty much, government contracting, it allows you to understand the technicalities of what contractors do to execute some contracts, right? We understand the jargon that's written, how to write a proper contract, how to get an understanding of the mind. That's kind of like one of the principles in government contracting, is the meeting of the mind, right? So if we were to create a contract, you have to have a non-ambiguous understanding of what the contract is, entails, and I have to understand it as well. So that's to benefit both parties. So in a nutshell, that's kind of what government contracting is, without the government part, right? So just think of that, but just add government, legislation and all that stuff into it.
Very cool.
And it's interesting because it offers a great segue into, the cryptocurrency field, because a lot of it is used in smart contracts. So I kind of understand. I don't know the code, at least not up till now, but I understand the underlying use. You know what I'm saying? The rhetoric and things of that nature.
The non-ambiguity of it, because that's like very important when making a smart contract. It can't be, oh, maybe I get half a Bitcoin, or maybe I get this. Like, it needs to be, no, you get this at this point in time. That's super interesting. So do you help individuals make contracts between each other, or specifically only working in the government sector?
A little bit of both. So in fact, prior to this, I held a workshop on how to execute a Ricardian contract and convert it into a smart contract. What a Ricardian contract is, in essence, is pretty much you write out a physical contract, but in an electronic form, right? So I held a workshop on open law. Open law allows you to create a contract and then convert it into a smart contract. So then it's now self-executing when both parties sign. So then how that benefits individuals and businesses alike is, now we could create a contract and understanding between multiple parties, and you type it out. I email it to you. All you got to do is click, you sign it, and now it's automatically converted to a smart contract and broadcast it to the blockchain, right? So now we have an immutable hash or immutable transaction that both parties will go back and audit the contract and see if everything is up to par and things of that nature. So to answer your question, both.
Yeah, no, that is super exciting. Now I have more. I know we want to jump into this workshop, but I have another question following up on that. So when you say sign the contract, you're signing it now with your private key, your MetaMask, or are you scrawling your
You sign it with your email. You don't necessarily need to have a MetaMask or a crypto wallet per se. But when you go on OpenLaw, for instance, all you got to do is make an account with your regular email, Gmail, ProtonMail, Yahoo, whatever, and you just click sign. It creates a digital signature, and then it lets the other recipient know, the other party know that Jeremy has signed the contract. He is waiting for your signature. And then once you sign it, it sends you a confirmation email that both parties have signed. Boom, and then the contract executes.
That's fascinating. And so your email acts as your digital identity, and that's legally binding. That's correct. Super cool.
Yep, that's actually spot on. Yeah.
That's super, super cool. Okay, we're going to jump into the workshop now. I see folks have trickled into the room. Welcome, everybody. We have an amazing workshop for you today with Jeremy Guzmán. Jeremy is a graduate assistant at Mount St. Mary's University, currently pursuing an MBA and a certificate in government contracting. He is the founder and president of Mass Adoption LLC, and Jeremy began trading Bitcoin in 2016. So he's an OG, but since then he's also grown a passion for educating newcomers into the space. So I'd like you all to give a nice digital welcome to Jeremy. And just a quick note before Jeremy takes over that you guys are more than welcome to ask questions as Jeremy's going through his presentation. There is a ask a question button just below the screen. Go ahead and click on that and ask your question there. If you see a question already there that you like, make sure you upvote it, and that way we get to all the most important questions first. And also take a look just beside the ask a question button. There is a couple poll options there. And actually, let's take a look here. Have we got some answers? So first question is, have you participated in DeFi yet? And we got 60% saying yes, borrowing and lending. Oh, it's changing before my eyes. I love it. I love it when as soon as I mention it, folks start going to answer.
Nice.
So we got like a 50-50 split now. We have 50% saying yes, they've been doing some borrowing and some lending. And then we've got 50% saying nope, waiting to see how all this plays out. So some folks are on the fence, but interestingly, no yield farmers in here. No DeFi dads. Go ahead up in the chat here. So we have another question here. Why did you tune into this workshop? So we have 30% saying, I'm a DeFi head wanting to keep up with the trend. Super awesome to see that. We have 50% saying, I'm interested in jumping into DeFi, but want to learn a little bit more. So we have some folks on the fence. And then 16% just like having no idea. We're not sure. They're not sure what all these crazy folks are talking about. So today you're about to get some superb knowledge. You're about to get your first taste if you were wondering. So on that note, I'm going to pass it over to Jeremy, and he's going to cast his screen. And again, ask your questions down using the ask a question button.
Awesome. Thanks for that. Yeah, hopefully whoever voted for that, they have no familiarity with it. I hope I answer some of your questions today. So in today's discussion, we're going to be comparing the traditional finance infrastructure to the emerging field that is decentralized finance. So one main question that we'll be answering is, how does DeFi refine some aspects of traditional finance, and how can we use them within our day-to-day activities? So we'll also be looking into some crypto assets that are supported in some wallet interfaces and decentralized applications. So with that said, let's get it rolling. So here's a quick overview of traditional finance, right? So in a nutshell, banks are the primary facilitators of money worldwide, right? Everybody has to go and access a bank or have some sort of bank account to have access to money, right? Physical money, right? So as seen and experienced by most, these bank accounts act as a barrier to kind of facilitate the movement of money, right? So banks implement these controls, whether it's accepting and declining deposits and withdrawals, offering lines of credit to businesses, institutions, governments, and individuals in the form of loans, facilitate money transfers, and as well as enforcing account balance minimums, right? So I'm sure everybody that has a bank account knows that they have to maintain a certain amount in their checking account as well as a certain amount in their savings account, or else they'll get penalized, right? So that's just some of the controls that banks execute or instill in their ecosystems. So banks until now have operated as, again, monetary intermediaries, key authorizers that allow the flow of cash to reach desired destinations and recipients throughout the financial industry, right? So if banks are to be seen as facilitators, then the vehicle to this facilitation is cash, right? So traditional finance architectures have some cracks in it, right? So one is the ability to use human discernment or discretion-based policies. Well, what that means, in essence, is humans are able to use their judgment to kind of execute money-based activities, right? That's kind of the watered-down version of that, right? So both of which are prone to human-related risks, such as collusion, corruption, mismanagement, and a lot of other factors that fall into that. So a great example that we saw was in 2008 and 2009 during the great financial crisis, A lot of corruption, a lot of mismanagement and collusion fell into that caused the housing market to crash and just the entire global economy to kind of get into discourse and disarray, right? So this said, what are other challenges caused by centralized banking? A huge one is that millions or billions, remain unbanked, right? So let's get into this a little bit. So the U.S. population currently stands at around 333.5 million people, right? Of which 55 million are considered unbanked or underbanked, right? So that's about 22% of U.S. households without access to financial services. That's a pretty good chunk, right? So to expand on that, we see the global population around 7.8 billion, where 1.7 remain unbanked, right? So now that lies the question, why, right? So there is a tremendous lack of financial literacy, right? In fact, according to the S&P Global Survey, financial literacy is concentrated primarily in developed and advanced economies like North America and Canada, the United States, the EU, throughout the EU, things of that nature, right? So financial and economic concepts such as numeracy, inflation are the most understood worldwide, while risk diversification is by far the least understood, followed by the concept of compound interest, right? So I find that really interesting because everybody has an understanding of what these stats are saying is everybody has an understanding of numbers or how interest accumulates over time and how an oversupply of money causes a devaluation of their currency. But not everybody understands the risk that comes with investing or risk diversification as stated here, right? So 33% of adults worldwide are financially literate, right? So that's pretty decent. However, that means that 3.5 billion adults lack an understanding of basic financial concepts, right? So to kind of break that down a little further, 35% of men and 30% of women are financially literate. So this suggests that about 65% of men and 70% of women, respectively, are not financially literate. They're financially illiterate. So that kind of begs the question: why is that, and how can we resolve this issue? Right, that's a really big issue. So, say you have access to financial services and you want to send money to a loved one abroad. Right, this is known as a remittance. On top of that, the money that you send, you'll be charged an average of an additional, let's say, 6.7%, right? That's the average remittance fee for 2020 or more. If you decide to use your bank, you better be prepared to pay a higher transaction fee of approximately 11% on top of the principal that you would like to send to a family member, right? So not only are the fees almost unaffordable, especially to those that don't have access to financial services, but transaction times are inconveniently slow. Oftentimes it takes about 24 to 72 hours just for the transaction to clear. So this is due to multiple transactions being done amongst multiple money transfer operators, known as MTOs, and correspondent banks before actually reaching the recipient or reaching a Western Union or a MoneyGram or a Walmart or whatever money transmitting operator that clears the transaction, whatever clearinghouse clears the transaction to the final destination. It could take some time before that money gets there, right? So the lack of a streamlined process kind of exacerbates or worsens any and all opportunities for failure, right? So this kind of goes in tow with the trust that is seen throughout the global economy, right? So the world's trust with banking systems and governments are literally at all-time lows, which is actually very interesting. So to the point that governments are widely deemed as unethical and incompetent all around, right? But businesses, however, are seen to be a little bit more competent, but could make unethical decisions regarding their stakeholders, financial decisions, and over prioritization of their shareholders, right? It's more of a capitalistic perspective as opposed to what can we do to improve the livelihoods of are stakeholders, right? A stakeholder perspective. So with that said, this also affects the rising global inequality, right? So although world poverty levels are decreasing, which is a good thing, the wealth gap continues to expand, right? So nearly less than 1% of the world's population holds over $1 million, right? So this group alone controls 46% of the world's wealth. On the other hand, we have 70% of the world population that hold less than $10,000. That's a pretty significant wealth gap, given the fact that if you have over $1 million or $1 million exactly, you are a part of that 1%. But if you have less than $10,000, you're part of the lower minority or majority, excuse me, is what they call it. All right, so that's pretty interesting when it comes to giving an equivalent to the total wealth seen throughout the global economy as well as here in the United States. So that in tow, the global economy is no stranger to currency manipulation and financial censorship, right? So due to centrality and central authorities, countries have the power to manipulate and potentially devalue their currencies, their fiat currencies. And to kind of give you background, a fiat currency is pretty much a paper-based money. So if you're in North America, in Canada, and the U.S., we use the dollar, right, the greenback, and then in Mexico, they use the peso. All three of which are fiat currencies. They don't necessarily have any intrinsic value in themselves besides the value that we assign to them. Is in essence what I'm getting at, right? They're solely backed by the faith in the performance of the economy and the country's respective government, right? So a great analog is to look here at in Venezuela, right? So using Bloomberg's Café con Leche index, you can see how 1 cup of coffee costs in Venezuelan bolivars. And as shown, 1 cup of coffee is priced at 350,000 bolivar, where 12 months ago, it would have cost just 14,000 bolivar, which is also extremely expensive. But the fact of the matter is that we're seeing an inflation rate of about 2,400% in the past 12 months, right? So this hyperinflation is kind of a byproduct of multiple factors stemming from loss of trust in the country's government and their fiat currency, the eradication of savings accounts throughout Venezuela, extraordinarily high unemployment rates, political unrest, and a massive economic recession that they're currently going through at the moment. And there's also other countries that are experiencing it as well, like Zimbabwe, Argentina, well, a lot of Latin America and South America are experiencing this as well. So this is just a great example of what could be done with centralized authorities and governments that mismanage their monetary policies. And then lastly, we get into centralized systems or systemic risk, excuse me. And decentralized systems bring along major systemic risks. So as experienced within the cryptos and traditional finance space, centralized exchanges have a single point of failure. And when compromised, they result in dire consequences, right? So in utilizing a centralized exchange or a structure, you're relying on one entity to facilitate whatever operation is needed to execute your transactions, right? So in the event that this entity fails or something goes wrong with the code or something's exploited, the entire system will crash or will freeze, and in essence will also expose any and all user data, right? So now a great example is Target, for instance. Everybody loves going to Target here in the United States, and they were hacked, and millions upon millions of people's credit card information was exposed and leaked onto the dark web, right? So now not only are people's credit card information exposed, but we have social security numbers, we have identities, and so on and so forth. It's a really bad situation, and this just goes to show the systemic risk that comes with a centralized authority or a centralized exchange. However, in a decentralized structure, it's the exact opposite. There isn't a need for a central authority. In fact, it eliminates the need for a middleman, and it further supports direct peer-to-peer participation. Right? So this kind of leads us to the question, what is decentralized finance? Now, decentralized finance is considered an emerging alternative to the global financial system, of which we just went over. Now, the DeFi community aims to build applications and services that will further improve inefficient systems such as remittances, accessibility, centralization, trust, and transparency. All right, so this is done through 6 primary features, as seen here in this graphic. One is permissionless networks. Permissionless networks allow anyone in the world to connect to the respective network or the respective blockchain, right? Your wealth, your status, your location doesn't really prohibit any access. All you really need is a smartphone or a laptop and an internet connection, and now you have access to a global economy, right? 2 is decentralization. Now, we are offered a decentralized service in which all transactions are stored on thousands upon thousands upon thousands of computers known as nodes, right? Nodes are just, in other words, verifiers in which it tells the network that these transactions are cleared and they have been confirmed and they are they're right transactions, like they're just transactions, right? Instead of having a central server, right? When you do a bank transaction, it has to go through a clearinghouse, and then the clearinghouse tells your bank that the transaction is cleared or confirmed, and then you have to wait 2 to 3 days to receive your money or to see the execution of that transaction, right? So then this leads to number 3, which is trustless transactions. So a centralized authority isn't needed to verify transactions, as I just stated before. Instead, the trust is set upon the operating protocol to fulfill this desired transaction. So you don't necessarily need to trust anything or anyone in particular when you instead you already know that once you execute the transaction, it will go through immediately due to the rule-based protocol that you're utilizing, right? And then this goes to 4, that offers transparency, or the transparent feature, in which all transactions are publicly auditable on the public ledger, right? So if you were to create or do a Bitcoin transaction, you could easily go to Blockscan and see that transaction done in real time. How much did you pay for that fee? The recipient of that transaction, the height of the block, how much did it cost? How much money was in that block in particular? You could go through the entire auditing process just to see that this transaction went through and it was successful. So that's actually one of the major benefits in blockchain technology in the financial end. And then this leads us to censorship resistance, which absolutely no one can invalidate a user's transactions, right? Or no one could double spend or shut down the network because everything is cryptographically secured on the respective blockchain, right? And then lastly is programmable, right? With the rise of Ethereum, we've now been offered the ability to create programmable money, right? So we're able to embed business logic into financial services at nearly little to no cost, right? Often seen in the implementation of smart contracts, as we've mentioned before, and just throughout decentralized ecosystems that will further complement the need for a trustless economy, right? So with that said, what is the potential impact of decentralized finance, right? And pretty much the end all be all here is that it allows for financial inclusion, right? Literally anyone that has access to an internet or a smartphone will attain financial service accessibility, right? And that is a huge plus for those that the 22% here in the United States that don't have access to a bank account or financial services, right? All they really need is to hop on their smartphone, download a few applications, and now they could interact with merchants, amongst themselves. They could actually establish a thriving economy amongst themselves, right? So people in third world countries, especially in emerging economies, finally have access to literal money. They can actually participate in the economy, right? And this comes in turn with totally destroying barriers created by status, wealth, geolocations, as mentioned before. These are all barriers of entry for low income or unbanked participants, right? So a great example is people in hyperinflation stricken economies like Venezuela or Zimbabwe or Argentina, or in developing economies in Africa and in India. Now they all have the same level of access as, say, a Wall Street trader, right? And then two is low cost cross border payments, right? So thanks to technological innovations seen in smartphones, direct peer-to-peer networks can be constructed. Right. Again, this eliminates the need for a Western Union, a MoneyGram, a Walmart, or other central facilitators and transfer operators. Right. So a great example of this would be during the Syrian refugee crisis. A lot of Syrian migrants came to the United States, and they would like to send money or remittances to their loved ones back home. Right. So now these migrants could now send money to family members instantaneously at little to no cost. And then this actually comes into our third tenet here, which offers security and privacy for that transaction. So DeFi thrives in allowing users to have full custody of their assets. So within that transaction, the user doesn't have to go through a clearinghouse. It goes directly to the recipient's wallet, and it could be, again, confirmed and audited on the blockchain. Right. So one of the earliest iterations of this is Bitcoin in the use of private keys, right, allowing for cryptographically secure transactions. So I'm going to take a step back and kind of explain that. So what I'm sure a lot of you have heard, not your keys, not your money, right? And that in essence makes total sense, because if you don't have control of your private keys, the private keys are in essence, let's say you have a house key and you give it to your friend. Now you no longer have access to your home, to your apartment, to your house. You can't get in, right? So if you don't have that key, you don't have access to the proverbial Bitcoin or the proverbial money, right? The hypothetical money. So private keys just ensure that you have access to that financial asset, to that monetary asset, right? And then four, censorship resistant transactions, right? So since all transactions are executed and secured on a blockchain, they're completely immutable, right? To an extent, no centralized authority can interrupt or manipulate any operation that takes place, right? So a prime example is seen in Argentina, Venezuela, and Cuba, of which are all using cryptocurrencies, whether in the form of stable coins or in the form of Bitcoin or ETH, or seen on Ethereum. They're using this to circumvent unreliable monetary policies that have restricted the growth of the economy as a whole, right? Great example is seen in Cuba, that now Cuban citizens are using Bitcoin to circumvent the embargo, right? Because they need to somehow stimulate trade, but the embargo does not allow imports from certain countries, especially here in the United States, right? So in order to kind of bridge that gap, if you will, they're using cryptocurrencies and Bitcoin and stable coins to kind of execute a means of trade, right? And then lastly is plug and play. Now, plug and play is as simple as it gets. All you need, again, is a smartphone, some internet access. You download applications such as, let's say, Coinbase Wallet or Argent Wallet or any wallet that really comes to mind. And now you have access to a global economy. Now we can actually start participating in trade and creating our own workshop, or not workshops, web pages that could operate as a merchant, right? People now could be fully operating businesses and participate in a global economy, right? So what can we expect from this? Well, we could expect an exponential growth in mobile wallets, right? We're actually seeing this here in the United States in terms of people now using more digital banks or neo banks, if you will, via application, right? People aren't going to banks and using actual branches. Everybody's using their phone now. So that's why we're seeing a whole bunch of banks close down their physical brick and mortar operations and going digital. But how does that translate to crypto? Well, again, mobile wallets offer a bigger ecosystem for a fraction of the cost, right? So mobile wallets offer that freedom, if you will. And this intel comes with stable coins. Stable coins, in essence, are just tokens that are pegged to the value of a particular fiat currency. So the euro, the British pound, the US dollar. It's technically sometimes, or majority of the time, it's pegged 1-to-1 to these tokens, right? So we're going to start seeing more of a utilization and adoption of these stable coins, and we're seeing it now in South America and Latin America, in hyperinflation-stricken countries. They're using these stable coins as a means to store their value or to use it as a hedge for inflation, right? And then lastly, people have the access to create savings accounts and have access to financial services. As shown here, I took a screen grab of Compound Finance, because Compound Finance offers access to allow people to create their own savings account by lending their stable coins or lending their crypto assets in return for a fixed, or a variable interest rate. So with that said, that's pretty much done. I'm pretty much done with that presentation. Now we're going to get into the workshop in which I'll help you create a MetaMask wallet. I'll show you how you can receive some funds and how to send funds, and then how to read the Etherscan receipt after the transaction has been sent. And we'll also convert our ETH into a stable coin and then further supply that to a interest bearing asset, maybe Aave or Compound or even OUSD. OUSD is Origin Protocols, a stablecoin that allows you to gain instant interest at a certain rate. And we'll kind of get into that as we get into the workshop. So with that said, I'm open to all questions. Please feel free to ask away. Let's brainstorm a little bit, and let's start a conversation. Thanks.
That was awesome. I'm coming back on screen here in a second. There I am. Thank you so much, Jeremy. That was amazing. I loved so much of what you said. I have some personal questions. The audience has some questions, and we've got an interesting chat happening in the sidebar here. So let's talk about what's going on in the chat a little bit first, and then we'll do the questions, and then I'll throw some questions out there too.
Yeah.
So there is a concern brought up here by one of our audience members about like DeFi, blockchain technology in general typically goes to the developed world, the quote unquote haves versus the have-nots. They typically get access to this first. So what is your perspective on how we can, affect these developing and the lower majority? How can they take advantage of this technology to equalize the balance?
That's a fantastic question. Actually, there are more smartphones in the world than here's a fun fact. There are more smartphones in the world than there are toilets, right? So that's actually a compelling stat, because that means that more people have access to this financial ecosystem, right? All they really need to go to is an internet cafe in developing economies, for instance, and now they have access to savings account, right? They could use Compound Finance, or they could use Aave or these interest-bearing protocols, and they could convert their fiat currencies into stable coins or crypto assets, if you will. And now they're offered an interest rate, right? They instead of putting their money into a controlled bank account that if you even have access to that bank account, that is in a devalued currency, right? I hope that answers that question.
Yeah, 100%. Yeah, and I know there are certain blockchain projects that are specifically trying to target this issue. Um, the one one that comes to mind is Acon is creating like Acoin specifically for the African continent, and he's targeting some very specific areas at first to help get this technology into the hands of the people there. So that's just one project there that I know is specifically trying to address that issue.
Yeah.
Super.
If I could follow that up, there's actually a vast variety of different coins. Like a great example, I mean, we're seeing Bitcoin being adopted now in several. I mean, like worldwide, it's becoming more of a unit. A medium of exchange, right? Merchants are now finally accepting Bitcoin as a physical or an actual asset that we could use in payment, right? Before it was just an obscure fringe asset that no one's like Bitcoin. Well, what the heck is that? You know. So now it's just further extending or expanding the financial ecosystem. Now we're not just limited to U.S. dollars and the exuberant privilege that it offers. You know.
Hmm.
So it's just really interesting to see how things are developing, and the playing field is slowly being leveled out. Yet the wealth gap continues to expand. So it's kind of a juxtaposition in some ways. You know what I mean? So it's really really interesting to see how this financial ecosystem is developing and growing.
Yeah, and looking at Google Trends, I think Africa is one of the hotspots where there's a peak in search results for Bitcoin. So it's definitely making its way around the world, and I believe that it will start to balance things out and start to bank these quote unquote unbanked folks.
In fact, I think the number one country though that has the highest adoption rate is in Africa. I think it's Nigeria. Nigeria has the highest adoption rate in the world. I think second to which is, don't quote me, I think it's Turkey. Turkey is the second highest. So these countries, if you really look at the performance of their economies, they're not the best. So there is kind of a correlation between um, underperforming economies and crypto adoption rates. So with that in tow, there's no there is no dissuading from the fact that these currencies work. This crypto network offers financial accessibility. So it's really interesting. Yeah.
Yeah. While we were chatting, I quickly pulled up the Google Trends map because I wanted to fact check us live. And
Yeah.
so, sure enough, worldwide Bitcoin search trends: number one, Nigeria; number two, South Africa; number three, Ghana.
Nice.
Yeah.
Nice.
So the top three are in Africa, and then we start to move elsewhere in the world. But yeah, that's very interesting and encouraging to see that being the case.
Absolutely.
Awesome. So, I mean, we've been talking about this DeFi concept, and like, I want to know your opinion on this because I think DeFi is the kind of a new buzz term that we've been using. But when I try and think about it, it is really an old concept. Like, Bitcoin to me is banking the unbanked. It's self-sovereign, like you were saying. It's putting the power into the hands of people. So can we maybe tease apart this concept of DeFi and like what are we using it kind of today versus the concept of actually being self-sovereign?
Yeah. So I mean, what the decentralized finance ecosystem offers is, again, the ability to operate independently, right? I don't have to go to my Chase or my Wells Fargo and withdraw my money and be questioned, why am I withdrawing this money, right? I could now participate and expand my economic horizon with different merchants, um, with different income opportunities that I didn't have access to with regular traditional finance infrastructures, right? Now I have a set. For instance, a great example is, again, the savings account. example. I could now lend my US dollar coin or my DAI or whatever stable coin I wish to lend at a 2.5% interest rate. In comparison, if I put my money into a bank account, it's only accruing 0.07%. This is due to the fact of treasury bonds being low and interest rates being at all-time lows at 0%. The Fed fund rate being at 0%. So the economic disbalance within traditional finance kind of acts as an inverse to the utility of decentralized finance, right? So, in other words, what I'm trying to say is a great example is whenever the U.S. dollar begins to devalue, right, ever goes down in value, we see an inverse correlation in the price of Bitcoin. Bitcoin increases in value when the dollar's value goes down. So what that goes to say is people see Bitcoin as a store of value and a potential medium of exchange, right? It kind of goes with there's a law called Gresham's law. And Gresham's law states that superior money weeds out inferior money. So what that means goes to say is people are more than willing to spend, let's say, their U.S. fiat currency and hold a superior asset like Bitcoin or a stable coin or a Litecoin, right? If that ever comes to fruition, right? So it kind of now we're starting to see more of utilization and adoption of these currencies, and they're held longer. So, yeah.
Man, I'm really enjoying this conversation. I know though there's some questions from the audience there, but I got to ask a follow-up question to that. So currently, we value most cryptocurrencies in the U.S. dollar. U.S. dollar is kind of like the world reserve currency. So Bitcoin is 11,000 in U.S. dollar. Do you see a point in the near future, or how far out is it, where we move away from valuing things in terms of the US dollar and then we start maybe valuing things in Bitcoin? Or will it be in the Chinese yen or something like that? What are your thoughts there?
Well, that's actually a really interesting question. I just wrote an article about this. So as stated before, the U.S. dollar has an exorbitant privilege, right? So what that means is, in essence, it's the global currency, the global reserve currency. So all trade needs to be converted into the U.S. dollar because pretty much everybody accepts the U.S. dollar as the business currency. Let's name it that, right? But we're seeing the value of the U.S. dollar go down significantly, right? So with that being said, if Bitcoin were to be used as more of like a global currency, we could use it as a unit of account, right? It could be like 1, 2, 3 Bitcoin, 0.5 Bitcoin, whatever. Or you could kind of granularize that and use the Satoshi metric, right? There's, I think it's like 1,000th of a Bitcoin is known as a 1 Satoshi, right? So there's like people that say by the time there's all the 21 million Bitcoin are mined, it's going to stabilize, and then hopefully 1 Satoshi is $1, whatever the dollar is worth at that time, right? So it's interesting to kind of see that because I think a contentious or controversial example would be the Libra project, right? And this kind of follows historical accounts. So the Libra project initially wanted to create a basket of currencies, right, comprised of the top currencies in the world: the U.S. dollar, the Chinese yen or yuan, the Japanese yen, the euro, the British pound. All these big economic assets will be compiled into one basket, which is not far from an initial concept that was proposed back during 1944 when we had it's called the Bretton Woods Agreement. Now, during the Bretton Woods Agreement, John Maynard Keynes, which is a huge economist back at that time, he proposed us in creating the Bancor. Now, the Bancor, in essence, was a basket of these global currencies, and it will have its own stable value, and people could use it globally as a universal currency. But the other option was to use the U.S. dollar as the global reserve currency, and obviously we know which option they chose from there. So in theory, the Libra isn't necessarily a bad concept. It's just the uh, the 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 facilitator or the creator of that currency is what's contentious in nature, which is Facebook, right? Um, so that's interesting, but yeah, that just goes to show the use case that the compelling argument that cryptocurrencies offer in this ecosystem.
Awesome. Thank you so much for that. Very insightful answer. Okay, I'm going to jump into some of the questions from the audience here. So it's interesting that we have a lot. We have an all-time low trust in banks globally, and so they're wondering where you got that stat from. Can you link us? I was interested in that too. Can you link us to that study that you had there?
Yeah, sure thing. Matter of fact, I'll pull up the. Hopefully, my computer doesn't freeze on me here, but it's called the Edelman report. Let me see if I have it here. Edelman Trust Barometer Global Report. That's what it's called. I'll copy the link.
Sweet.
All right. Should I drop it here in the chat?
Yeah, go ahead and drop it in the chat because I'm gonna look that up afterwards as well.
Yeah, sure.
I know some folks will like it. Perfect. Thank you so much.
No problem.
Okay, we have another question here. Another newcomer to the space is asking, which DeFi platforms do you recommend for beginners? You mentioned your interest in educating individuals on crypto. Do you have like tutorials to work through or videos that help beginners get into this space?
Yeah, fantastic question. In fact, we're going to get into the workshop now if we have enough time. And I'm going to help you create your own MetaMask, and I'm going to send some ETH to my wallet, and then in turn, I'm going to ask some of you if you follow the workshop through. I'll send some stable coins to your wallet as well, so you could see in practice or in real time how it works, right? But to answer your question, yes, I have a YouTube channel. Or Mass Adoption has a YouTube channel in which we launch educational material that allows people to onboard into various wallet interfaces, how they could maneuver through these wallet interfaces, how they could leverage it into their day-to-day activities, and how can they begin participating in some of these DeFi protocols. So it's I try to really break it down in layman terms because I know it gets overwhelming with some of this jargon, and that's not my goal. My goal, if you want to do your own due diligence and read up on it, fantastic. But my goal here is to give you a proper understanding of how these protocols work and how you could benefit from them moving forward. So.
That is amazing. So yeah, we're gonna drop a link to. I think nice. One of our audience members, they dropped a link in there for everybody else, so you can check out that YouTube link. And I'm also gonna drop in Jeremy's Twitter handle as well as Mass Adoption's Twitter handle towards the end, so everybody has that easily accessible. Cool.
The link, yes. I just saw in the chat. Yes, Joseph. That is the link. Excuse the Xcode 9096 hash. I made this back in high school as an Xbox with my Xbox account. So it is Mass Adoption. That these are our the content that we're making. I'm actually in the process of finishing out a course, a DeFi beginner course. Expect that within the upcoming weeks. It's been really hectic on our end, but rest assured it's going to be there.
Sweet. Amazing. Okay, I have one more question, but I know you have the workshop, so let's get into the workshop, and I'm going to save this question for the last.
Sounds like a plan. All right, let me share my screen again. All right, let's share screen. Is it working? Oh, there it is. Okay.
Yeah.
All right. Cool. So our goal with this workshop is to get you up and going with a MetaMask wallet, and then to be able to read and understand and ascertain how to properly read the transaction on Etherscan, how to use ETH gas station to gauge how much gas you want to pay for a transaction. I know whoever is a beginner and they don't know what gas is, I'm going to break that down when we make these transactions. So yeah, let's get into it. So everybody, just go ahead and type in MetaMask.io in your web browser, whichever you're using, as long as it's not Safari, because Safari will not support these widgets, right? So go ahead and type in MetaMask.io. Let's go ahead and click download now. And now, varying on which interface that you're using, if it's Chrome or if it's iOS or Android, you kind of want to download it with the appropriate software. For me, I'm using Brave browser, which uses Chromium, which it's supported by Chrome. Here, if you scroll down a little bit, it shows the supported browsers. And you can go right ahead and click on Install MetaMask for Chrome, or if you're using iOS and you're using it on your iPhone, install MetaMask for iPhone, and then for Android users, install MetaMask for Android. So let's go right ahead and download it for install to Chrome. And it's going to navigate you to the Chrome web store. Now I'm going to emphasize this once this page loads. You want to double check that it's offered by MetaMask.io. If it's anybody else, if there's a different name here, then it's probably a fake, and you don't want to go through with it because they'll probably steal your assets once you put it on that wallet, or they'll just probably hack your laptop, and we don't want that to happen. So double check, triple check that it says here MetaMask.io. Once you do that, let's go ahead and click here, add to Brave or add to Chrome, or if you're using Opera, add to Opera. And we're going to click add extension. And you just got to give it a moment. It's going to pop up here in the top right-hand corner. It's going to look like a fox. It's taking longer than you. There it is. Remove from Brave. So as you can see here, it's a little fox. And then a window's probably going to open up. And then we're going to begin setting up our wallet. So I'm going to go right ahead and close these tabs so it doesn't slow down the process. So let's go ahead and click get started. And if you want to import a pre-existing MetaMask wallet, you can go right ahead and import it here, as long as you have the 12-word phrase written down, which I hope you do. So that's how you import it. But in this demonstration, we're going to go and create a wallet. So let's go ahead and tap on create a wallet. Pretty much what this page is saying is you're allowing MetaMask to opt in and out via settings, to send anonymous analytics to them to see how they could improve their interface and how they can improve the widget moving forward, and then to maintain a public aggregate dashboard to educate the community. So just for transparency reasons, they offer this, and you can go right ahead and say no, but if you say no, you won't be able to use the application. So let's click I agree. And then we could create a password. So anything that comes to mind. I always think of passwords, so. All right, so once you create your password, that you have read the terms in the agreement and the terms of use. Pretty much the terms of use is telling you that they don't have access to your data. They won't compromise your account unless you don't write down the 12-word phrase, or as long as you don't share your private keys. If you share your private keys with anybody, you're pretty much asking to get your account compromised, right? So just don't do any of that, and you'll be good to go. Okay, so tap on create once you put your password in, and then it's going to send you to this secret backup phrase. So what this secret backup phrase means is that if you were to forget your password for any reason, we forget our password all the time, you could go right ahead and type in the 12-word phrase, this 12-word phrase, and allow you to regain access to your wallet, right? So if you're on this page, go right ahead and take time to write these 12 words down somewhere safe, somewhere that you know that you'll have access to if you forget your password. So I'm going to go right ahead and take a couple seconds and write this down. Okay. All right. So once you have that written down, go right ahead and click next. Oh, also you could download the secret phrase to your laptop. So if you do so, I hope you have a USB or an external hard drive that you could just kind of migrate that file onto. You don't want to store it on your actual laptop. In the case that your laptop crashes or it just stops working, it will stink to not be able to retrieve that data, and in essence, you'll lose your money, right? So just make sure you go through that safety procedure, and you'll be good to go. So let's go right ahead and click next. And now you're just gonna re-enter the code that you did, the 12-word phrase that you just wrote down. So let's take a second and do that. I'll do that on my end. It's kind of like playing a game of memory. It's actually really interesting. All right, now that I have all 12 of the words, let's click confirm. And I have access. I have now successfully created my MetaMask wallet. So as you can see here, we're going to break this down really quick. So if you want to have access to your public key, you could easily go to buy, and you're going to see direct deposit for Ether. And you're going to click view account. Now, I'm going to quickly explain what this string of code is, which is known as your public key, and what export private key means. I'm not going to click on that, but I'll briefly explain what it is. So, the public key is the destination address, or the destination address that you provide people to send to your to send funds to your wallet, right? Kind of think of it as your Twitter handle, right? If you give people your Twitter handle, they have the ability now to send you direct messages to or an email. Now people have access to interact with you, to send you gifts or what have you, or gift cards, whatever the case may be. This in essence act as a digital identifier, right? A public digital identifier is your public key. Now your private key could be compared to, let's say, your routing number or your account number for your banks, right? The moment you give someone else access to that information, you could jeopardize your funds, or jeopardize the integrity of the funds that are within your bank account, right? So you don't want to share this private key with anybody. Make sure that you're always sharing the public key, right? So that's public key and private key explained in a nutshell. All right, so what I'm going to do now is I'm going to send some ETH to this wallet, right? So bear with me. I'm going to send some ETH right now. All right, it should take a couple of minutes, depending on how congested the network is.
So while we wait for that transaction to go through, let's take a peek here at our polls. Um, so we have a little bit more of a majority now on folks that are still undecided about getting involved with the full DeFi space. 57% are saying nope, waiting to see how things play out, and wondering why folks tuned into the workshop. Yeah, so those folks that are on the fence, they came for some information before they jumped in. So 62% are saying that they want to learn a little bit more before jumping in, but 37% said that it's changing before my eyes. 25% now are saying that they're DeFi heads and they want to keep up with the trend, but 75% are saying that they're interested in jumping into DeFi but need to know a little bit more. So that's super interesting there. And I see there's a new question. So if we still got some time while we're waiting for the transaction to clear, do you have any thoughts on why the DeFi market is doing so poorly recently? Do you think it's just an ebb and flow in the market?
Yeah, actually, I do. We saw a huge increase, right, or influx of money come into the DeFi space, primarily because people were yield farming, right? What yield farming is just you move your money from several interfaces that offer higher yield, right? So in essence, let's say one protocol is offering 20% yield as opposed to one that used to have let's say a 10% yield or a 20% yield as well. You're just going to migrate your funds over to the more appetizing option, right? So that's pretty much what we saw people doing. And if you go back and look at the metrics, we just saw a huge flow of money going from protocol to protocol to protocol during that time. So it was actually really crazy. But now a lot of projects were kind of scams, right? We saw kind of like a little bubble. I will classify it, and in these high yield projects, and people were just going in there and looking for a fast return, and those projects will then pull the rug, and the founders had a back door and took the funds with them, right? So now we're seeing all those projects kind of get liquidated and get kicked out of the ecosystem, and top projects are focusing on building out again. So now we're seeing everything kind of slow down and begin back into the development phase and further improve their pre-existing protocol. So that I hope that answers the question. Yeah.
Awesome, thank you.
Yeah. For some reason, this is taking forever, and it's not good.
Yeah, so that brings up another question. Like during this whole DeFi craze, this yield farming craze, we saw the highest gas fees that ever existed on the Ethereum blockchain, which made it pretty prohibitive for any like folks that are looking to move like small amounts of money around. So like, what are your thoughts on, yeah, I guess like the longevity of Ethereum in its use case for the common person and not just for like whales moving massive amounts of money around where they're willing to pay $20-$30 for a transaction fee if they're moving 100K around, but for a small folk like myself just trying to move a couple hundred around, I ain't trying to pay $30.
No, that's actually a great question. And in fact, as we wait for this transaction to go through, which I apologize that it's taken forever, we use the ETH gas station to gauge how much gas or tax we'll be paying to kind of push the transaction to go through. So as you can see here, depending on the quantity that you're sending, you're going to pay one of these gas fees or within this range of gas fees, right? So what the standard gas fee shows is a 50 gwei. Now 50 gwei is similar to what one satoshi is to the Bitcoin, right? So it's just a denomination of ETH, right? The ETH is the token that is built on the Ethereum network, right? So 50 is what we call the safe gas fee. So what the safe gas fee means is it's going to take longer than usual, but your transaction will go through in due time, right? It's just going to take longer. Fast, as you can see, it's going to happen in less than 5 minutes. I mean, less than 2 minutes. And then 85 is you need that money ASAP is going to go through, but of course it's at a higher fee, right? It just makes sense. So the faster you want the transaction to go through, the more gas you will pay. And if you're willing to, if you're balling on a budget, but you still want to participate, then you probably want to go with the more economic option, which is the standard option here, and just push the transaction through. So that's kind of what gas is in a nutshell. Gas is just the facilitator of a transaction on the Ethereum blockchain. So again, I know that may be hard to wrap your head around, but in practice, as you continue to use some of these protocols and start participating in some of these protocols, you're going to see that gas is a key feature, or it's without gas you can't really use the ETH blockchain. And to kind of give you a historical background on it, these networks, these what's called a Turing complete networks, they communicate with one another, right? They use a universal code known as Solidity, right? So with Solidity, all of the nodes and all the computers that verify on the Ethereum blockchain understand it. It's kind of like a copying machine, right? Or a printer, when you send your data, or you send when you send the data over to the printer automatically knows and converts the information into the image that you want to print out, right? It's a Turing complete system. Same thing with the Ethereum network. Now, systems like this are subject to what's called the halting problem. So now, what the halting problem is yes, this code will work, but the question is, how long will it work before it stops, right? And you don't necessarily know exactly when the code will stop operating. Hence why Vitalik hence why Vitalik included gas into the Ethereum ecosystem, because now it kind of alleviates the halting problem. Now you are paying you're paying an extra fee to facilitate this transaction, in which it will execute or initiate the smart contract to begin operating, right? So that's kind of on the back end how that works in a nutshell. And for some reason, my transaction is taking forever and a day to go through. So this is kind of a bummer.
It's those yield farmers, man. I blame the yield farmers. They're out there. They're out there on moving money around and hogging up all the block space. And there's actually another question here asking about what is the block size? Is that referring, and how does that play into scalability?
Yeah, sure. So matter of fact, what we could do is let's go hop on Etherscan. And as mentioned before, the Ethereum network is completely, let's say Bitcoin and the Ethereum network are completely transparent, right? So I could go here and I could see all the transactions made throughout the day, the price of Ethereum, the market cap, the difficulty it is to mine ETH, right? All the latest blocks that have been mined, the latest transactions, so on and so forth, right? So, for instance, let's go ahead and check out. Let's check out this transaction, right? Now, as you can see, the everything is laid out plain and simple. So you can see the status of the transaction was successful. The block number is shown here with how many confirmations it took for the block to be mined. The timestamp when it took place, how long ago did it take place, how long ago did it take to get confirmed, or how fast did it take to get confirmed, who sent it, the recipient, of the transaction, how many tokens have been transferred. As you can see, this guy, whoever he is, was balling and sent $32,000 worth of US dollar tether to this person or contract, right? The fee that he or she or it may have paid, which is an astounding $2.16, which is pretty much nothing compared to how much the initial transaction costs. How much the transaction cost in gas or in Gwei, right? It cost them 139 Gwei, so they probably paid more than the higher limit to kind of get this transaction to be pushed through almost instantaneously. And then the gas limit and the gas used for the transaction. So this you don't really need to know. It's not all that important at the moment. However, if you really want to know here, you can just scroll over the question mark. And pretty much what the gas limit is, the maximum amount of gas provided for the transaction. So for normal ETH transfers, the value is 21,000. So for contract, this value is higher and bound by the gas limit. So the gas limit is pretty much the higher limit or the set higher limit of which a transaction could be executed. Right? And then how much gas is used, the exact units of gas that was used in the transaction. Now here, the nonce is interesting. The nonce could be deemed as like a fingerprint, right? It's how many transactions have been done with that account, and it's an identifier for that particular transaction, right? So that's just that in a nutshell. I mean, I've seen here is a sequential running number for an address beginning with 0 for the first transaction. For example, if the nonce of a transaction is 10, it will be the 11th transaction sent from the sender's address. So to kind of use that as an example, the nonce was 6,686. So we could assume that this was his, hers, or its 6,687 transaction done within this wallet. So I hope that answers that question as well.
I was talking away and I just realized I was on mute. Thank you so much for that answer. On the topic of scalability and transaction fees, are you familiar with some of the like the proposed scalability platforms for Ethereum, for blockchains in general? And like, like what would you count as, like, you know, the most viable, or what have you been looking at?
Scalability wise, Loopring has done a fantastic job with their layer 2 protocol. You could go on their page. I believe it's loopring.io, if I'm not mistaken. And you can create a ZK account. A ZK is a zero knowledge account, and you could transact almost instantaneously, if not for like insanely low fees in comparison to as you saw here on the Ethereum chain, which you're paying maybe $2, $3, $5, $20 even sometimes if the gas fees are high enough. Other layer 2 protocols are like Matic, ZK Rollup, it's Plasma. Those are the ones that come to mind. And pretty much what these protocols are meant to do is, again, to scale the Ethereum network to further improve transactability, right? Because right now, as you can see, it's taken at least 10 minutes or more from our transaction to clear, and it still hasn't gone through yet. So that's the con, if you will, with the Ethereum network, is if there's high congestion or high traffic on the network, your transaction will probably get stuck or have to clear in a longer time.
Cool. I'm not suggesting that you do this, but I know there's also like the option if a transaction gets stuck in this kind of way, like maybe you accidentally put too low of a fee, there is a way to speed up your transaction, right? Do you want to
Yes,
talk a little
there
bit
is.
about that? And you don't have
Yep.
to do it, obviously, yeah.
No, there is a way. In fact, you just reminded me. I've gone ahead and canceled my transaction. So thanks for that. Yeah. So what you could do is cancel your transaction. So on MetaMask, they give you the really neat option of uh, of canceling the transaction if it's taking too long, and that's where the nonce comes into play because the nonce acts as the transaction's identifier. So what you could do is I'll actually show you here in practice. If I were to send, well, first I have to give MetaMask access to that. So what you're going to do if you want to have access to use the nonce, all you got to do is go to settings, go to advanced, and go to custom transaction nonce. So you're going to go ahead and click on, and it should save automatically. So you don't have to worry about that. So what happens now is let's say I'm going to send a transaction, let's say to myself, right? Well, in order to cancel a transaction, you have to send a transaction to yourself, right? So you'll send it to your wallet. You don't have to put in an amount. However, you do have to put in a higher gas price that's higher than the previous transaction that's taken forever to send, right? And if you do that, it will push through that transaction and cancel it, right? It's kind of like fractions, right? When you have a 1/1, it kind of cancels out, and you know that it's one, right? So let's use this example, this transaction as an example. So in theory, if I want, if this transaction were to be stuck, right, this guy could have gone through and he paid 139 gwei for this transaction. So he could go in and put in, let's say, 400 gwei, and obviously I don't have enough, and he'll click save, and then he'll enter the nonce of the transaction, right? And in the blockchain's eyes, in the network's eyes, it'll tell the network that to cancel this transaction, right? Another transaction is being pushed through at a higher rate. We need to prioritize that transaction over this one, and it'll kick this one out of the network. Um, However, my transactions have been canceled, so I'm gonna try one more time for y'all, and hopefully it goes through. All right, let's see here.
I think the network also knows we're doing a live demo, and as I've learned doing several tech events before, it always goes well in testing, and then something happens during the live part. So this is just par for the course. Take note for any of the folks that are working on in the hackathon. When you present, stuff's gonna happen, but you just got to roll with the punches, and we'll figure it out.
Yeah, yeah. This is a learning moment. So yeah, for anyone that's going to be using MetaMask, just be prepared to go things go through things slowly. Double check everything. I On my end, what happened was I didn't put in a higher gas fee because I was anticipating because earlier during the test run, I did a standard fee and it went through no problem with my other account. So now obviously it's that's not what's happening. So.
It's all good. We here with you, man.
I'll try one last time. Let's see. Let's fingers crossed it goes through. So let's do it. Let's do this one more time.
So one interesting scalability solution that I've been looking at that we haven't talked about yet is XDAI. Have you heard of XDAI?
Yes, I've heard of XDAI. I haven't used it. myself, but I'm familiar with the concept. I think it's pegged 1-to-1 with DAI, regular DAI, which is supported by, or which is backed by the dollar, is pegged to the dollar. I believe it's gas free, so you don't have to pay a tax for the transaction fee, right?
There is still gas on it. So what I find very interesting about it is, like, you're right. Their native token is XDAI, which is a wrapped form of DAI. So you can it's a sister chain to Ethereum. So it's compatible, and they're building bridges, the Omni bridge, to port ERC20 tokens over to the XDAI network. And so the transaction fees are paid in a stable coin, but they're so low that it's practically free. You're paying fractions of fractions of fractions of a penny. And they have their own version of Uniswap. So for the folks that want to take part in DeFi, in a low, I guess, barrier of entry, because transaction fees can be very high. It's hard to just put a little bit of liquidity into a Uniswap contract. Where on XDAI, the fees are low enough that you can put $10 and just test it out if you wanted to get involved in that. And of course, with any new technologies, there's contract risk, and you're layering on different risks when you're porting your funds from one chain to another. But again, it's the fees are so low there that you can have a low stake and try things out. So I've been playing around with some XDAI projects that I found really interesting.
Oh, there we go. All right, cool. So the transaction has gone through, finally. So thanks for everyone's patience. So I received the $37. I paid 40, but it's fine. So what we're gonna do now is we're gonna swap some of my ETH, and we're gonna make it into a stable coin, and then we're gonna lend it to Compound to start accumulating interest, right? So let's close out the Etherscan, and let's go right ahead. So if you want to use a decentralized exchange, right? You don't want to use a Binance, you don't want to use a Coinbase, you want an instantaneous spot market buy, right? You can go to Uniswap.exchange, which is the more popular decentralized exchange in the decentralized finance ecosystem, right? And then you're going to connect the wallet. So we're going to connect to a wallet. You're going to click on MetaMask. You want to click next. You want to connect. All right. So the goal here is I want to convert my ETH into a stable coin. So let's go ahead and convert it into DAI, right? DAI. Now, as you'll see, there's various flavors of DAI, right? There's idle DAI that uses that's on the idle finance protocol. I'm not all too familiar with FiDAI. The compound DAI is on compound finance, which we're about to hop on in just a minute. There's ADAI, which is on the Aave protocol, which again is also an interest-bearing asset, which actually I think we might do over compound. Reason being is because Aave gives you a 1-to-1 ratio to your deposits, as opposed to CDAI. CDAI is represented in their own compound token. So $100 worth of CDAI is not necessarily pegged 1-to-1 to the deposited amount. So yeah, I didn't click on it. Excuse me. So let's type in DAI. We're gonna go with here. And now, take into consideration how much the transaction fee will cost. I'm not going to max out on my transaction, right? Because now I can't swap. So what we'll do is I'll do 0.02. I'll do 0.05, about $18. We'll swap that out. And as you can see here, it gives you a little receipt how much the exchange rate for DAI to Ether is. So 372.18 DAI is equals to 1 Ether, and we could flip that over. So 0.00268 ETH is equal to 1 DAI, right? So the minimum amount received will be $18.5 DAI, and it will be a price impact of 0.01. So what a price impact is, as you can see here, the difference between the market price and the price due to the trade size, right? So it's kind of like a slippage fee, if you will. And then liquidity providers will earn a fee from this transaction. So to kind of get into that a little bit, and I don't want to get into the weeds too much, is decentralized exchanges operate off of liquidity providers. Now, what liquidity providers do is similar to what the central bank does for banks, right? The central bank gives banks the monetary supply to kind of facilitate the transactions needed to stimulate the economy, right? Same way with what liquidity providers do for a decentralized exchange like Uniswap. They provide or they lend money to the protocol in exchange for transaction fees, right? So right now, this pair is the ETH to DAI pair. So anybody that has provided liquidity to this pool is going to earn 0.3% of the transactions, or of all transactions that occur on this pair. So as you can see, I took too long, and we need to update the price. Let's go ahead and confirm swap. It's going to cost about $5.16 to push this thing through. But to avoid it getting stuck, I'm going to choose the faster gas fee. And to double check, we can go here to the ETH gas station, as we stated before. And the fastest is 85. So what I'll probably do is I'll make the transaction 100, just to be triple safe that it's gonna go through. So I'll check it out one more time. It's 100. So I'll be paying $5.74. Let's click confirm. And to double check, so you could see how the transaction will be cleared and how we could read it on the blockchain, we could go here to our MetaMask wallet. Let's go to what's in the queue. And the swap has been executed, right? So let's go and see how we could read that on Etherscan. So the transaction, as you can see, was successful. This is my transaction hash, which is kind of like, again, my fingerprint for this particular transaction. Which block it was confirmed in, how long ago it took, how long it took for the transaction to go through, who sent it, where it was going to. So it was going to this contract, the Uniswap contract, which in turn was sending my ETH to the Uniswap protocol, which then wrapped my Ether and then converted it into DAI, right? And then, as you can see, this was the process here in tokens transferred, how much of value was in this transaction, and how much I paid for the transaction fee, which is kind of insane when you look at it in comparison to the initial transaction, right? So that's pretty much how you could read the log of your transaction very briefly, right? So now the transaction has been cleared. We could go here to our MetaMask and check out our DAI balance. But as you can see, my DAI isn't in my wallet. I can only see my ETH. So you could go to add tokens, click on DAI. In search results, you'll see DAI stablecoin. Click on that, then click next. And as you can see, there it is. My 18.6 DAI is in my wallet. So if we go back, now everything is taken into account. So now let's set ourselves up with a savings account, right? So I'm going to go ahead and go to Aave.com, or you could go to Compound Finance, both of which offer Very similar features. I'm just going to go to Aave because I'm more comfortable with their interface and with their protocol. So I'm interested in creating a decentralized savings account, and I like to lend my money to their protocol. Now that I've converted my ETH into DAI and I'll deposit it with this protocol, I'll be earning on average a 4.34% on my deposit, right? So let's go right ahead and click deposit. You go right ahead and connect the browser wallet. So it's going to automatically sync to your MetaMask. You want to click next, click connect. And once it syncs to your wallet, it's going to take you to this dashboard. And if you want to double check the rates again, you can go right ahead and go to the top left-hand corner where you see the dashboard. I'm sorry, not the dashboard, the home. And it'll show you all the interest rates for the respective asset. So again, we're going to be depositing DAI, right? So let's go right ahead and click on deposit. I'll be depositing DAI. I'll be depositing all my DAI. Click continue. Before you deposit, you need to allow or give Aave access to your MetaMask in order to submit the transaction or to submit or deposit your DAI into the protocol. So let's click on approve. You're going to pay this fee real quick. I'm going to increase it just to make sure that's going to go through. And the transaction has been submitted, and we could check it here on Etherscan if we wish to do so. For demonstration purposes, I will click on it. And what's interesting here is, as you can see, this is the transaction hash. So this is the identifier of the transaction. The status is currently pending. The block that's the transaction will be confirmed in is still pending, as you have to be mined. The time last seen, so it's just ticking away at how long the transaction will take, and then how long the estimate was for the transaction. So it was estimated to go through between 11 to 12 minutes, but as you can see, it was pushed through faster than that. So that's the benefits of paying a higher gas fee. So now that it's confirmed, let's go ahead and deposit our funds. And now, learning moment, I don't have enough money to deposit my funds into the Aave protocol. So this is again a learning moment to take into consideration the gas fees when participating or interacting with some of these protocols, because gas at the moment is extremely high and extraordinarily high, especially during these times. So what I will probably do is I will make it the average and we'll confirm. And now I have submitted, it's submitted to the blockchain, and we'll double check on that. And as you can see, the estimated confirmation duration is an hour, right? So it's significantly slower than the previous transaction, which is proportionate to time, which will take longer for it to be confirmed. So this is just an estimate. Of course, as you saw with the previous transaction, it may be faster, or on the other end, it may take longer, like the other transaction I tried to send prior to the $37 that was sent to this wallet.
You're getting a shout out in the chat. Everybody's thanking you for taking the hit, paying these crazy gas fees to give us a demonstration and let us know how it goes down.
Yeah, it's again, it's one of the it's a pittance. It really is. It's a nuisance with how high these gas fees are. We can actually check it out here on the gas tracker on Etherscan. Yeah, well, let's compare how much I paid to how much they're suggesting here. Um, I paid 53 Gwei, or 53, 53 Gwei, so about $7 that you saw, right? $7. Yeah, it's gonna $7.98, right? While here the low transaction was 81 Gwei, so it's significantly lower than the estimated or the recommended gas price, which means that this transaction probably won't go through within the next 5-10 minutes. It'll probably take a lot longer than that. So again, this is just another learning moment. I was kind of anticipating this, or I'm actually happy that it's happening. That's occurring now during this demo, because now you're well prepared when you start participating in some of these protocols, right? So yeah, that's just one of the many benefits, or the many negatives of the Ethereum network is the gas fees as of right now. But yeah, that's the thing. So I'm not sure if there's how much time we have left, but that's pretty much how you could start using your MetaMask, how you set up a MetaMask, how you could receive a transaction, and I think the big focal point of this demonstration is gas fees, right? You really always want to take into consideration how much it will cost to push the transaction through. So as you can see before, it was 81. Now it dropped down to a safe low of 75. So that means probably the traffic has calmed down a little bit, but still my transaction is pending. So you always want to take into account how much the gas is in proportion to how much you're trying to push through, how much is the actual transaction in itself. And you kind of want to weigh out your opportunity cost, right? Is it worth paying the $7.98 for an $18 transaction? Probably not. It's probably not beneficial at all. But let's say if you were like the other transaction and you were depositing $37,000, is it worth paying $100 or $50 in gas to push that through? That might be more of a I might have a higher opportunity cost in terms of proportion, as opposed to paying $8 for an $18 transaction. So this is just, again, a learning moment. It's not something to be upset about. It's just you keep going and you learn from it. So yeah.
That's awesome. Thank you so much, Jeremy. This has been like an amazing deep dive into DeFi. I'm gonna make us the main screen here, and I'll bounce your cast. Hopefully that transaction goes through sometime today. But yeah, we learned a ton about like transaction fees and how like prohibitive it can be on Ethereum at the moment. But there are scaling solutions that are coming on down the line. We mentioned some today. We know ETH2 is coming out, and that has a whole slew of solutions that are going to be rolled out in the next couple years. Who knows really when it's going to finally hit, but phase 0 should be going live this year. Fingers crossed.
Fingers crossed. Yeah. And what I'll do is anybody that attended this, go ahead and check my Twitter sometime later. So I'll kind of keep you guys I'll keep you guys posted on whether or not these transactions go through, and just provide you with screenshots on how you can further utilize Aave or other interest-bearing protocols, interest accruing protocols to kind of set yourself up with a savings account. Again, my apologies that didn't go through. Again, that's just one of the many flaws in the Ethereum network. But again, you have a higher, you have more exposure to create your own financial footprint, if you will, right? So I hope you guys really enjoyed it. Thanks, Block Hacks, for giving me the opportunity to do this. And go ahead, follow me on Twitter. Follow Mass Adoption on Twitter, and I'll keep you guys posted.
Awesome. Yeah, I dropped 2 Twitter handles in there, so you guys can go check those out and follow them. Final question for you. It's been burning the back of my mind. You mentioned during your talk about Venezuela and Zimbabwe and like other nation states that have seen crazy amounts of hyperinflation, 2,000% inflation over a short period of time. That's insane. And when I try and talk to folks that are not into the blockchain crypto space about like inflation, and I point out these places in the world, they're like, oh, that'll never happen to my country. Oh, that's that country. It's not gonna ever happen here. What are your thoughts on like this type of situation?
Yeah, I mean, history is really interesting, right? So let's go back a little bit. During World War II, right? Germany was in shambles, right? To the point that they were using their paper currency, their francs, because it was valueless. And during the winter, it was so cold that they were using it as insulation on their walls, right? People were physically, literally burning their paper in order to keep warm during the winter. That's how valueless their fiat was. Another great example is during the Great Depression, right? There was literally people did a run on the banks because banks didn't have the proper security procedures to store people's money. So there was literally no fluidity. There was no reserves for banks to push back on because everybody took it, right? So this in turn, we could kind of compare it to again 2008, 2009, and currently with the COVID pandemic in the use of quantitative easing, right? The central bank has the ability to distribute. I'm trying to avoid using the word pump, but distribute unlimited amounts of monetary stimulus, right? We literally just saw $6 trillion or so get pumped into an economy in a span of 3 to 4 months. That in itself was unfathomable before then, before March. But that just goes to show that money in itself is fictitious, right? It's fictitious in the concept, right? Because at the end of the day, we are the ones who provide value to these vehicles, right? And how we view them, right? It's kind of like gold. Gold is just a shiny bar of material, right? That we just dig up from the earth. But what adds value to it inherently is it's scarce, right? There's only a limited amount that's there in the world. Its portability is if it's divisible, things of that nature. These are just many characteristics of money that fall into it. And that's why Bitcoin, in essence, is probably a better alternative to fiat currencies because it's a proper store of value. So to say that your country will never experience inflation, it's don't knock it, because even the United States is anticipating high inflation rates moving forward, because right now we're in a deflationary ecosystem or a deflationary economy. So we need some way to kind of devalue the dollar a little bit, which is what this quantitative easing efforts have done. So that's kind of like an economic and historical explainer on that. So inflation is definitely possible.
Awesome. Thank you very much for your insight on that. I really appreciate your talk today. It's been super amazing. While you were coming to the end there, I threw in another poll question. So before you folks, before we close out, take a look at the poll. There's a third one that you may not have answered already. I see a few answers coming in. The question was, do you feel more comfortable getting involved in the DeFi after this workshop? And I see a great majority of folks, almost all the people that have answered so far said 100% they're about to submit a transaction on a DeFi protocol right now. So that is amazing to see. And of course, I always like to say, invest in proportion to how you understand something. Like, it's not a binary thing. Like, you don't need to understand everything fully to get involved. If you understand a little bit, you can take a little bit of risk. You know, what's the no risk, no reward.
Exactly.
So yeah, if you got something out of this workshop, maybe it's worth investing a little bit and trying it out. And obviously, never invest or put risk anything that you're not willing to lose. But those that do risk, there is potential reward. So thank you so much, Jeremy, for your talk today. One last thing before we all leave is we are ever trying to become better and deliver more value to people, to you lovely hackers out there. So please take a look at our feedback form and give us some feedback on this workshop. What you liked, what you disliked, give us a rating, and we're going to continue to make these workshops better for you. And Jeremy, I hope you come back and give us another talk later on, or perhaps in the next hackathon. But again, thank you so much for tuning in today.
No, thank you for having me. Everybody have any questions, feel free to shoot me a DM on Twitter. Thanks again. I really appreciate the opportunity, and hopefully I could get back on again. So thanks.
Perfect. All right, folks. And on that note, I will see you guys in the Discord chats if you have any more questions. But until then, I will see you on the next workshop.
Peace. Close the video. Yeah, close the video.